Let's talk about one of the most frustrating things in trading. You analyze a chart, mark your key levels, and finally spot a clean setup. Everything lines up. You place your stop loss just below support, feeling confident, thinking this trade has real potential. And then it happens. Price drops out of nowhere, hits your stop loss, and instantly bounces back like nothing happened. And you just sit there watching as price rallies in the direction you predicted, but now you're not in the trade. Sounds familiar? It should. Because this happens to every trader at some point, and it's not a coincidence. It's not bad luck. And no, it's not your broker messing with you. What you just experienced is called a liquidity sweep, a move used by smart money to enter positions by using your stop loss as their entry. This isn't a conspiracy, it's just how the game is played. In this video, we'll show you exactly how institutions pull this move off, and more importantly, how you can use it to your advantage. By the end, you'll know how to spot the liquidity sweep, confirm the reversal, and enter trades with sniper-level precision. Let's break it down. Institutions don't hunt your stops because they're evil. They do it because they have to. Every trade requires someone on the other side. When you're trading with small amounts, it's easy to just click buy or sell. But if you're a big trader managing millions of dollars, you can't just click buy or sell without moving the market abnormally. You need people on the other side of your trade to fill those huge orders. So, when institutions want to buy, they look at spots below obvious support levels because that's exactly where retail traders like you put stop loss orders. When those stops get triggered, your positions automatically turn into sell orders. And this gives institutions the perfect chance to open large positions without shaking the market. After grabbing all that liquidity, price usually jumps right back up, leaving retail traders shaking their heads. On the other hand, when big players want to sell, they push price above clear resistance levels and trigger the short seller's stops placed there. Those triggered stops become immediate buy orders, giving institutions exactly what they need to sell large amounts without crashing the market. Once their positions are filled, the market reverses downward quickly, leaving every breakout trader confused and trapped. Understanding this means you won't be caught off guard anymore. Instead, you'll start trading like institutions and smart money traders. And the good news for you, with the Price Action Toolkit, these liquidity zones appear automatically on your charts, showing you exactly where institutions are likely to hunt next. Let's set up the toolkit and show you how to find trades using liquidity sweeps. First, open your chart. Go to your Indicators tab, find the Invite Only section, and click on Price Action Toolkit. There'll be a link in the description to get instant access. Once it's loaded, open the settings. Scroll down and turn on buy-side and sell-side liquidity zones. You'll now see where buy-side and sell-side liquidity zones are. These are where a liquidity sweep is likely to happen. Next, turn on market structure labels and pay attention to two things: change of character and break of structure. Change of character means a shift in market direction. If it's bearish, the market switches from bullish to bearish. And if it's bullish, the market goes from bearish to bullish. And break of structure confirms that the shift is real and not just some fake out bounce. After that, turn on fair value gaps. These are imbalances in the market and price typically comes back to refill them. Lastly, turn on breaker blocks. These are invalidated order blocks that act like support and resistance. These spots are also where the big players love to re-enter. And if you're paying attention, you can catch the move with them. Now, we're ready to find some trades. Let's start with a long setup. So first, you're looking for price to drop into a sell-side liquidity zone. When price drops into that zone and then instantly bounces back, that's your sweep. That's smart money grabbing liquidity. But don't enter the trade yet. Wait for the confirmation, or precisely, you're waiting for a change of character. This will show up when price breaks above a recent lower high. That's your indication of the market reversing from bearish to bullish. Now, wait for price to pull back, and this is where you line up your entry. Watch for price to come back into either a fair value gap or a breaker block that formed right after the reversal. When price taps one of those zones, watch for signs of buyer strength. It can be a strong candle, a big wick, or a nice engulfing candle. That's your green light. Set your stop loss just under the recent low and target the next buy-side liquidity zone. That's the whole setup. Liquidity sweep, market shift, clean pullback, and a sniper entry. But what about a sell setup? It's the same, but just in reverse. In this case, you're waiting for price to push into a buy-side liquidity zone. Wait for price to move above the zone and quickly come back down. That's your liquidity sweep, because institutions are selling into that breakout. But again, don't rush it. Wait for the change of character. This time, you'll see it when price breaks below a recent higher low. That's your sign that the trend has just reversed from bullish to bearish. After the market shift, wait for price to pull back into a breaker block or fair value gap that formed right after the sweep. That's your entry zone. Look for a big red candle or a long upper wick at those areas and open your short position. Set your stop right above the recent high and target the next sell side liquidity zone. And that's the short setup. Now you're fully equipped with the ultimate step-by-step buy and sell set up to trade liquidity sweeps like smart money. If you found this detailed breakdown helpful, make sure to drop a like, comment, and subscribe. Also, don't forget to grab the Price Action Toolkit from the description below. Thanks for watching, and until next time.